What if I told you that right now, while you're watching this video, someone is making money? Not working, not hustling, not doing anything, just sitting there, maybe eating a sandwich, and their bank account is growing. That's not a fantasy. That's called owning stocks. And by the end of this video, you're going to understand exactly how it works, why most people never start, and what separates the people who build real wealth from the people who just talk about it. And no, this is not a crypto thing. This is not a get-rich-quick thing. This is something way more interesting than that. Stay with me. Okay, first, a question. Do you know who Warren Buffett is? One of the richest humans alive, worth over $100 billion. He didn't invent anything, didn't start a tech company, didn't discover oil. He just bought stocks for decades. That's the whole story. Now, I'm not saying you're going to be Warren Buffett, but I am saying the tool he used to build that wealth is available to you right now on your phone. Most people just never bother to understand how it works. So let's fix that. What is a stock? Like, actually. Imagine your friend comes to you and says, "Hey, I'm opening a burger place. I need $10,000. I don't have it all. You put in $1,000, you own 10% of the business. The burgers are amazing, the place blows up. A year later, it's making $50,000 profit. Your 10%? That's $5,000 from a $1,000 investment. That is a stock. When you buy a stock, you are buying a real piece of ownership in a real company. When Apple sells 1 million iPhones, you get a slice of that. When Google runs 1 billion ads today, you get a tiny piece. You're not betting on something random. You are a part owner of an actual business that makes actual money. The stock market is just the place where people buy and sell these ownership pieces every single day. Now, here's where it gets wild. The companies listed on the stock market are not small burger shops. We're talking Apple, Microsoft, Amazon, Google, companies worth trillions of dollars, and you can own a piece of any of them right now, today, for the price of a pizza. Some stocks cost less than $10 per share. You don't need to be rich to start. You just need to start. Okay, so how do you actually make money from stocks? 2 ways. First one, the price goes up. You buy a share for $50, company grows. 3 years later, that share is worth $200. You sell it, you just made $150 doing absolutely nothing. Second way, dividends. Some companies literally pay you cash just for holding their stock. Every quarter, money in your account, just because you own shares. It's like being a landlord, but without fixing anyone's toilet at midnight. But I already know what you're thinking. What if the price crashes? What if I lose everything? Valid, let's talk about it. Yes, stock prices go up and down, sometimes dramatically. In 2020, when COVID hit, the market dropped 30% in about a month. 30%. People were panicking, selling everything, convinced the world was ending. And then the market recovered completely in about 5 months, and then it kept going up and up and up. Here is the single most important fact about the stock market that nobody puts in the headlines. Over any 20-year period in stock market history, the market has always gone up. Every crash, every crisis, every time people thought it was over, it came back. The average return of the stock market over the long term is roughly 10% per year. Your savings account, maybe 1% on a good day. So money sitting in a bank is actually losing value when you account for inflation. Money in the market is growing. That's not opinion. That's 100 years of data. Now let me show you something that will genuinely mess with your head. This is called compounding, and it's the reason time is more valuable than money. You put $10,000 into the stock market and forget about it. 10% average return per year. After 10 years, you have around $26,000. After 20 years, you have around $67,000. After 30 years, you have over $174,000. You didn't add a single extra dollar. You just let time do the work. The money made money, and that money made more money, and it just kept snowballing. This is why starting early destroys starting smart. Someone who invests $100 a month starting at 22 years old will almost always end up richer than someone who invests $500 a month starting at 35, even though the second person invested way more money. Time wins. Every time. Okay, but here's the part where most people mess up. They try to pick individual stocks. They spend hours researching companies, trying to find the next Apple, the next Amazon, and most of the time, they lose. You know how many professional fund managers, people who do this full-time with teams of analysts and decades of experience, fail to beat the market average? Over 80% of them. Over 80% of the experts can't beat the average. So what chance does a regular person have picking individual stocks? Not great. But here's the good news. You don't have to. There's something called an index fund, and it changed everything. An index fund is basically a basket that holds hundreds of stocks at once. Instead of betting on one company, you own a tiny piece of the 500 biggest companies in America at the same time. When one crashes, the others carry it. You're riding the whole economy, not one horse. And because it's automated, no expensive manager is running it, the fees are almost nothing. Warren Buffett literally said that for most regular people, a simple index fund is the best investment they'll ever make. When the richest investor in history tells you what to do with your money, you probably listen. So what does actually getting started look like? Step 1. Open a brokerage account. It's like a bank account, but for investing. Takes about 10 minutes. Many are completely free, no minimum balance. Step 2. Put some money in. Even $50, even $20. The amount matters less than the habit. Step 3. Buy an index fund, something that tracks the S&P 500. That's just the 500 biggest American companies all in one fund. Step 4. Set it to automatic. Every month, same amount goes in automatically. You don't even think about it. Step 5. Leave it alone. Do not check it every day. Do not panic when it drops. Do not sell when the news gets scary. Just let it sit and grow for years. That's the whole strategy. That's the thing rich people do that they don't teach you in school. It's embarrassingly simple, which is exactly why most people don't believe it works. Let me leave you with this. 10 years from now, you're going to be 10 years older no matter what. The question is whether you'll have a growing investment account on top of that, or whether you'll be watching another video about this exact topic, wondering why you never started. The barrier to entry has never been lower in history. You can start today with less than the cost of lunch. The only thing that's stopping you is the decision to actually do it. If this clicked for you, subscribe right now, because the next video is going to be even more useful. I'm breaking down exactly which index funds to pick, what fees will quietly destroy your returns, and the one mistake beginners make in the first week that costs them thousands. It's the video I wish someone had made for me when I started. Don't miss it. I'll see you there.